The number of 55K is absent the ETF, right? The fair value of 55K, which is what we'll march toward by the halving, right? We'll march toward fair value. Then fair value will change on the halving event, and that pushes it to 100. So 100 has nothing to do with the ETF. Now, what the ETF has the potential to do, and I totally agree with Tom, it has the potential to really mess up the supply-demand dynamic, because you're talking about a $550 billion asset, right? And so an ETF, when the ETF is approved, and I'll give it 50-50 chance on October 17th.
The argument that BlackRock gains from cheaper Bitcoin for its ETF launch isn't straightforward, and neither is the idea that the government is suppressing BTC's price. Numerous theories emerge whenever the price of Bitcoin takes a sudden and steep dive. The usual suspects include government regulations, the possibility of exchanges manipulating prices, Bitcoin whales manipulating prices, overleveraged traders, and some conspiracies involving Tether. Mark Yusko will explain what's really happening with Bitcoin. Also, he will share his new prediction for Bitcoin in 2023. So let's get started with the video.
Yeah, and it's so funny, right? Technically, I did say, 150K, which is 410%, but that's not my base case. That was my blow-off case. But Tom Lee came out yesterday and doubled down on his base case being 150K. But look, the math is simple to me, and I'm a math guy, so I like math, and I even have the hashtag just math, right? So the fair value of a network is very determinable. We've talked about this before. I can jot out a Metcalfe's law model, and I can come up with a fair value for any network, whether that's a computer network or telecommunications network or the Bitcoin network. And that fair value number has been very consistent over the years. It's got a little bit of wiggle around crises, but it's been pretty consistent. And today that number hangs out around 55K. Talked to Tim Peterson, who I think has the best Metcalfe's law model at N Squared Crypto. And in a time like now where the price, which remember price is a liar, has nothing to do with the value of anything. It's just the price that two people will exchange a small amount. And the price today is hovering around that 29,000 level. That's materially less than 55. Well, then if another thing happens, we're in crypto summer. What's crypto summer? It's just the period right before the halving. And then we go to crypto fall right after the halving. What do those mean? Well, 4-year cycle. Why it's a 4-year cycle? Because it's baked into the code for the halving. And human beings go from greed to fear over these market cycles. Like in stocks, it used to run on about a 7-year cycle with the business cycle. Then the Fed kind of messed that up with QE, and now it's more like 11, 12-year cycle. But bottom line is cycles are human emotions, fear and greed. And when the price is below fair value, people like me accumulate. I'm an investor. I mean, people like me. I'm not saying I'm smart or dumb. It's just I like buying things below fair value. I think that's a smart way to do things generally. And so investors will accumulate. Well, as we approach the halving, something happens. That fair value number is essentially going to double. Well, why is that? How can that be? Well, the halving is this ingenious construct that cuts the block rewards that are paid to the miners to secure the network. Well, if you think about it, the miners' costs are fixed. Electricity, power, electricity, and their machines. If the price didn't change and your block rewards get cut in half, you're basically out of business. So it inherently moves the price higher And that's what we have seen every halving. And every halving between the 4-year cycle has added a zero. Went from 10 to 100, 100 to 1,000, 1,000 to 10,000. The last cycle, I think fair value jumps to 100,000, right post halving. But that's fair value. What we know about markets is they don't stay on fair value. They get way below when people are fearful, and they get way above when people are greedy. So as the investors get their fill of buying all the way up to that $100,000 level, then the traders come in. And traders don't give a crap, a technical term, about fair value. They just want movement. And they're going to buy and they're going to sell and they're going to trade. But then what happens is as the price starts to go parabolic, which it does because greed starts to enter in, then the speculators come. And then the gamblers come. Well, what's a gambler? Gambler, someone doesn't know anything about anything they're buying. They hear from somebody or read on some, Twitter post, hey, this is a good stock. Or they watch Dave Portnoy pull, tiles out of a Scrabble bag. Oh, I'm going to buy that. Are you fucking kidding me? Oh, sorry. Are you serious? You're going to buy something with real money because a guy pulled letters out of a Scrabble bag?
It worked.
And the problem is,
very brief time.
It works for a few minutes, right? It works for a few seconds because a bunch of people do it. The bigger your audience, the more manipulation you can do in the markets. And so GameStop and AMC and all that stuff with the Redditors or the Predators or whatever you want to call them. You can do that. And ultimately, Bitcoin, I think, will go to another speculative blow-off. And normally that blow-off has been about 2 times fair value. So in 18, we got to 20 on a fair value of 10. In 21, we got to 60 on a fair value of 30. And this time, I don't think we do double. Why? Well, because...
ETF should smash volatility to some degree, right?
Definitely. We'll talk about the ETF. And that's the wild card. It should smash volatility, but it could blow all my numbers and all Tom's numbers right out of the water.
We're going to watch Tom in a minute, but yeah, go ahead.
But the reason I don't think it does twice this time is there's not as much leverage. Most of the leverage has been dissipated because the SEC sued all the big leverage providers and made it really difficult for people to get 100x. Now, you should never buy an 80 vol asset with 100x leverage, right? That's just dumb. And I shouldn't throw my brother under the bus, but I think I've told you this before. He called me up and said, hey, they stole my Bitcoin. What are you talking about? Well, I was a bit max on. Stop. No one stole your Bitcoin. You levered up an 80 vol asset. You got a margin call. You couldn't pay it, and they seized the collateral. That is not theft. Now, technically, people say, well, they lured people in to steal their Bitcoin. Well, that's certainly possible if that was their business model, but it's technically not theft. You signed the deal. But levering an 80 vol asset a little bit, fine. Like if it's below fair value, maybe fine. But levering it when it gets to fair value or above fair value.
Between August 15th and August 18th, Bitcoin's price experienced a significant 12% decline. This occurrence followed a familiar pattern, prompting a variety of reasons put forth by analysts and experts. Unfortunately, due to the decentralized nature of cryptocurrencies and the lack of transparency among exchanges, verifying whether a specific entity influenced the price movement remains a challenging task. The idea that BlackRock might benefit from a lower Bitcoin price before launching a spot Bitcoin ETF is not as straightforward as it may seem. While the concept of a lower Bitcoin price leading to increased profitability upon ETF launch might be intuitive, there are several reasons why this might not align with BlackRock's broader interests. First and foremost, BlackRock has built a reputation as a respected financial institution based on its commitment to market stability and investor confidence. A sudden and substantial drop in Bitcoin's value could undermine the overall credibility of the cryptocurrency market, something BlackRock would aim to avoid. the priority of maintaining the market's legitimacy might outweigh any immediate gains resulting from a low Bitcoin price. Secondly, obtaining regulatory approval plays a critical role in launching any financial product, especially within the cryptocurrency domain. The SEC meticulously assesses the potential for market manipulation and safeguards for investor protection. Engaging in activities that could be construed as price manipulation could jeopardize BlackRock's chances of securing the necessary regulatory approvals for its ETF offering. Lastly, instilling investor confidence is of paramount importance when introducing any investment product, particularly a novel one like a Bitcoin ETF. A sharp Bitcoin price drop could erode trust among investors, not only in the asset class itself but also in the ETF. Therefore, BlackRock's interest likely lies in launching the ETF during a period of positive sentiment where investors feel confident about the potential for future gains. So, what's your price prediction for Bitcoin at the end of 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.